Welcome back to the channel. Aaron here from the Bitcoin Bros. And in today's video, we're going to get it into strategy, into Bitcoin. Not a lot going on the weekend, but still some valuable information in today's video. Make sure to stay tuned to the end. Should be a quick one. Like and subscribe. We have new content coming out every single day. And we got this tweet from Michael Saylor. He says, "What if we start adding green dots?" And nobody knows what Saylor is talking about here. Nobody knows what Saylor is going to do or what these green dots actually mean. It's like, Saylor, give us a little bit more context so we can understand what's going to be coming next week. I saw somebody on Twitter say, "Oh, the green dots mean that he's buying money, so he's buying cash and selling Bitcoin." That would be crazy if you start to see green dots and he's selling Bitcoin to buy cash. I don't think that's what's going to happen. There was a good take over on Twitter from Joe Burnett. He's saying the green dots mean because MSTR's MNAV has dropped below 1x, this means it would be more accretive BTC yield to issue digital credit and buy back MSTR. So actually issue STRD, STRC, STRF, and those perpetual products. And instead of buying more Bitcoin, they're going to be buying MSTR. So that's what Joe believes this announcement is going to be all about. But I don't know. It's interesting. Saylor, we need some more context, bro. Like, nobody knows what you're talking about here. But we'll see tomorrow what Saylor is actually talking about. But before we get further into today's video, make sure to check out iTrust Capital. They have a special offer of a $100 funding bonus when you guys sign up. If you want to set up a retirement account through iTrust Capital, you can do that for long-term hodlings. Bitcoin, as you guys have seen over the past couple months and over the past couple years, is very volatile. But if you hodl for the long term, that's when you see the extreme gains. So you can do that through a retirement account through iTrust Capital. And this is spot Bitcoin. This isn't IBIT or some ETF product. This is actual spot Bitcoin. And they also have their PCA custody account, which is a little bit different than how the other crypto exchanges work. They set up the security a little bit different. So your account has no way to be drained if a hacker gets into your account, like what we've seen on some other crypto exchanges. Accounts get compromised and then the hackers send those funds out to another external wallet. So they set up their custody a little bit different, and they're giving you guys $100 for signing up when you use our affiliate link, which will be in the comment section and the description below. And again, the strategy a little bit here. We closed on Friday at around $177. The preferreds all recovered on Friday, which was really good to see. You can see STRD was up 4%, STRK up 6%, STRF up around 4%, but STRC is the only one that didn't go up on Friday. Definitely want to see STRC start to make its way back up to around that $100 price point that we have been looking at. And for the most actively traded U.S. stocks on Friday, strategy is still coming in around the top 15 with around $2.68 billion of actively traded volume there, which is always good to see. And then these are some of the key events that we have to watch out for this week. We're going to get the ISM data on Monday. We're getting job data on Tuesday. And you guys can pause and look at everything else that's coming later in the week. And then another key date is going to be December 5th. That is when we're actually going to see the final announcement to see if strategy actually is going to be included in the S&P 500 or not. So some key days this week, and we'll definitely see the traditional market and the Bitcoin market move off of all these data points once they come out, like we see so much in the past. And if we look at the ETF flows for Bitcoin, past week, we actually had a positive Bitcoin inflow. We only had one outflow day. That was on the 24th. But the 25th, the 26th, and the 28th, we all got inflows for Bitcoin. So now we're starting to see a little bit of a trend change here. This is the first time we saw a green week in quite a while here for Bitcoin. As you can see on this chart, the past 4 weeks before last week were all outflows. We had one little green, but then basically the past 6 weeks have been outflows for Bitcoin. And now we're starting to see a little bit of an inflow to the Bitcoin ETF. So maybe this is signaling a trend reversal, and we'll see more inflows going into December and January. If we see that, obviously that is going to be good for the Bitcoin price, and we'll be keeping you guys update on the Bitcoin ETF flows. And then checking out this chart here, just looking at some TA. Bitcoin tends to follow gold, and as you can see right here, these two charts are very correlated. You're looking at a gold chart from 2010 to around 2025 where gold finally broke out. and this is comparing to a smaller time frame for Bitcoin, 2020 to 2025. You can see gold peaked back in 2010, hit its head in 2020, consolidated for a couple years, and then blasted off. And maybe what we're seeing right now is Bitcoin hit its head, now it's consolidating before another blast off to higher prices. So something to pay attention to there, potential indicator to where Bitcoin is going to be headed over the next couple of years. But that's all I have for today's video. Really quick one. If you guys enjoyed, if you found some value, make sure to hit that like button. Like I said, though, not too much else to talk about. Let me know what you guys think, what Saylor's announcement was all about, the green dot. What do you think that's all about? Leave that in the comment section below. My name's Aaron from Bitcoin Bros. I'm out. See you guys in the next one. Have a great rest of your day.
Bitcoin halving was really important for the first 12 years of the asset because we were cutting the amount of Bitcoin that was being cut from the supply was very material, relevant relative to the demand in the market. But right now you're seeing days when Bitcoin trades 50 billion or $100 billion in a single day. The total amount of the halving in the next halving is going to be 225 Bitcoin. So 225 Bitcoin times even 100,000 a coin is $20 million a day is the impact of the halving. And so $20 million isn't a first order impact on a $50 billion a day liquidity. It's not even a second order impact. It's probably a third order issue. The primary drivers of Bitcoin right now are the structural developments in the market. For example, if the banks extend $50 billion worth of credit, right, that dwarfs 20 million a day in the halving. And then when the SEC loosened the restrictions on derivatives trading on IBIT, the open interest in IBIT went from 10 billion to 50 billion in a few weeks. So you're talking about tens of billions of dollars of demand for the asset based upon the embrace of the traditional finance establishment.